Hi. I'll try and speak slowly. I was warned by Georgie at the start not to talk too fast because I know I have a problem with that. So please, I'll look at the front row. If I'm talking too fast, just tell me to slow down. So my name is Mich Cooney. I'm one of the organisers of Data Science, Dublin actually. Dublin Data Science, and a whole bunch of meetups in Dublin. And that's kind of why I'm here today, because I met a whole load of people talking about stuff. So my original background was, when I came out of college, I ended up working for a quant hedge fund doing derivatives trading. I wasn't very good at it, and we also did it right into the credit crisis in 2008. And that kind of went the way you might expect. But we kind of limped along for a while, and it was me and another guy in Canada, so I was very much by myself. And I started to learn that one danger thing is I didn't have anyone to tell me I was wrong, because I was pretty much the only one who understood it. The other guy was the trader guy, and I was pretty much the quant guy. So I realized that's a very, very dangerous thing to do, which will come up to a quote in a sec. So I met a bunch of people, and I came across insurance, and the trading business wasn't really going anywhere. I kind of automated myself out of necessity. Everything was kind of running by itself. And I discovered the industry, and then I kind of realized it was absolutely fascinating despite the reputation that it has. So insurance very much has a reputation of being old school, conservative, buttoned down, not very interesting, quite boring. If you meet an awful lot of people in the industry, they won't disabuse you of that notion. Some of them are. Having said that, though, there is a bunch of people in the London market, which is this kind of specialty insurance, which I believe Michael mentioned earlier, which is a lot more like Mad Men. So it's these guys in very, very nice suits, drinking and socializing and womanizing, thinking it's the 1960s, and making quite a lot of money to do it. And as I started working in insurance, I realized that it was absolutely mental. And I'll talk a little bit why that is. And completely technophobic. An awful lot of the systems are very, very old school. And the culture and stuff, as Michael mentioned in the previous talk, and to a certain extent, what Valentin said in the first talk, none of those lessons have been even aware that they exist. So I'm going to start off with a few quotes off the internet. The first one is one of my favorite ones by Mark Twain, which was mentioned in the book, the film The Big Short, if you've ever seen it, about the credit crisis, which was, it might not be available with the rendering, but it ain't what you don't know that kills you, it's what you know for sure that just ain't so. So that's one of those unknown unknowns, as Donald Rumsfeld once said, and there is an awful lot of them in the insurance industry. They have no idea of technology. In a lot of cases, they've never heard of source control. Data governance doesn't really exist either. There's systems where data is being changed on the fly with no transactions, so you don't really know what happened 3 years ago. All you know is that that number got changed last week. You don't really know what was available at the time if you're going back trying to figure out why you've got decisions to make, all that kind of stuff. And then the next quote is one by Upton C. Sinclair, which is something we have learned to our cost, which is from his very famous book called The Jungle, which was about food safety standards around the turn of the century in the US. And it's very difficult to get a man to understand something when his salary depends upon him not understanding it. And that is definitely something we have encountered, because you just get people who you're talking stuff, but they don't know, and they're pretty certain if that you're right, they're going to be out of a job. So they decide to, yeah, let's not and say we did. And then finally, one final quote I do like, which is when getting quotes off the internet. Oh, sorry, I'll be another. Is the problem with quotes on the internet is that you often can't trust them, by Vladimir Lenin. So. But I can guarantee you that those two are accurate. The other version I've heard of that is Abraham Lincoln, but I thought Vladimir Lenin would be a bit more appropriate considering the area of the globe we're in. Sorry? Yes, that's what I was going to say, and Valentin has somewhat stolen my thunder, so no drink for you afterwards. Anyway, so, why exactly am I saying that? I mean, it's all very well me standing up here and then saying, you know, why is it like the way it is? So I'm going to talk a little bit about the insurance industry first. Most of you probably have a basic idea of it, but there's an awful lot of insider information that I kind of had to learn over the last few years. And you kind of need to understand that to understand why it is the opportunity it is. So most people understand the basic concepts of it, and there's all sorts of different types of insurance. You have car insurance for your car if there's an accident, to pay third parties if they're getting injured. Employers' liability and workers' compensation is a very common one. If people get injured while they're working for you, you have to make claims to, help with their medical bills or help them with their disabilities. Those will be often kind of very personal for dealing with casualty lines, but most of the industry is actually commercial insurance, which I guess employers' liability would be considered, in that it's companies that are taking the insurance out rather than individuals. Property would be a very big one. It's kind of the famous one that you hear about. You'll know if there's property insurance because you get a whole load of people in London around August going, as they're looking at the Stormwatch or whatever. There was one very funny time I was meeting a friend of mine for lunch, and he said basically it was like the World Cup final because there was a whole load of people watching what Hurricane Harvey was about to do. Because basically it's bonus or no bonus, depending on which way and luckily for them it went the right way up Florida. The other weird thing about insurance is you become incredibly sociopathic because it doesn't really become about what's happening, and you kind of forget all the human cost of everything, and it really comes down to, will I have to pay a claim or not? Which is funny in a very black humor kind of way, but it's probably not too good for the soul. And then another very big one, which almost no one really knows about, and I've only learned about it a lot in the last 6 months, is marine insurance, which is the main reason that Lloyd's of London exists. For those of you who haven't heard of it, Lloyd's of London is not the bank. It's a very, very fancy building in London that is like an insurance marketplace, and it was one of the first ever non-life insurance products that was kind of made public, even though insurance does actually go all the way back to history. And it was a whole bunch of ship owners making voyages in the late 1600s, and they were looking to, all their wealth would be put into a ship vessel, maybe going to India or Africa or wherever, and they were looking for some way that if the ship sank or if something went wrong, they would be able to get compensation. So what happened was a bunch of wealthy men of means in the late 1600s started gathering in Edward Lloyd's coffee shop in the city of London, and they started getting pieces of paper insuring ship vessels. And they would get a pen, and on the paper they would write their name underneath a line, and that's where the word underwriting comes from, if any of you are interested in that term. And it was called, basically, those were the people who were like insuring the vessels. So that's kind of turned into this massive business, and actually the vast majority of I think it's about 30 billion premium a year that gets written through Lloyd's, maybe it's 100. A very, very large percentage of that, something like 50 or 60% of it, is marine-based insurance. But it's one of those things that almost no one knows about. And marine insurance in particular is quite funny in that sometimes when you get a syndicate in Lloyd's that are insuring a vessel, the only thing they have to go on is a photo of the ship. And by photo of the ship, I mean literally they get a photo and they go, yeah, I'll underwrite that, there we go. And then they wonder why they can't make any money. So, hold on. So, the industry as a whole is split up into a number of different segments. There is life insurance, which is what we get when we pay a premium every month. And then if we die in that set period of time or we have a savings product, we get a payment out. General insurance is probably also known as P&C, or property and casualty in America, is kind of what most of us would consider is non-life. But there are kind of two other ones that I wanted to mention there. There is health insurance, which is kind of straddles between life and general. Life and general are actually very different from one another, and that's even enforced historically. Actuaries who work in life tend to not know anything about general insurance and vice versa, which I find very, very strange. And that goes back to the whole Mark Twain comment of they don't really learn from one another either, even though in certain cases, definitely in terms of data management and stuff, they could do that. And then finally, you have reinsurance, which is insurance for insurance. So this is very common in like casualty. I think it was created originally in Germany because there was a whole bunch of contagious fires somewhere in southern Germany, and a whole load of insurers got wiped out. And they realized that they wanted to disaggregate the risk from different regions, so they ended up creating, I think that's where Munich Re originally, I think historically comes out of. They kind of aggregated the risk throughout the whole country. So that's kind of insurance for insurance. And reinsurance tends to be a bit more advanced, I think, because they have to think about some crazy stuff. So like one of their scenarios they have heard about is like the zombie apocalypse, where if you have like a major mortality event in the world, where you've got like 40% of people dying, that's the kind of things that reinsurers, the cheery scenarios that they have to think about. So they tend to be a bit more advanced, but the rest of them, life in general, life in particular is particular. I'm going to talk a little bit about that now. So with all that, why do I think data science is going to change a lot of insurance? Well, it's not so much a question of why data science will do it, it's more of a question of the way the insurance industry is. So they don't really have an awful lot. I'm going to, by the way, most of my experiences with the UK and Ireland, I've got some anecdotal evidence about continental Europe and a little bit about North America, so my experience is pretty much talked on that. But from what I've heard, it's quite a universal problem. Their big problem is that they're old and they've been around for quite a long time, so they've got all the legacy issues and an awful lot of expensive systems that they're afraid might break. And as a result, doing something new comes with a risk. And if someone decides, look, we can't actually deal with this mainframe anymore that does all our policy administration, we need to switch over into a new system, they'll probably get fired because it'll probably fail. So there's very much an agency risk, if you're familiar with that in behavioral economics. But what we're starting to see now is that there's the fintech world, which I'm sure most of you are familiar with. That's, with so much money in the world, that's actually starting to bleed now into insurance, because people are seeing it as another risk asset that is not correlated with other asset markets. And there's just an awful lot of money now, with cheap money coming out with central banks with relatively low interest rates. And it's looking for a place to go. And what we're starting to see now is an awful lot of startup insurance companies that are applying all these things that we can do, so like sensible data systems, taking a systematic and a rigorous approach to how we do things, trying to figure out how to do regulation in the way that obeys the law as opposed to applying the policies that the company has decided to do. That's one of the other big things I learned in the last 6 months. There's a very clear distinction between what the regulator says and then what your bank says it has to do to make the regulator happy. And they're often quite far apart. It's just a whole bunch of people have decided that you need to keep sending in your gas bill every couple of weeks anytime you want to do anything in your bank account, even though they have 14 copies of it already because they've decided they've lost it. So that's kind of why, and also an awful lot of this stuff is hugely amenable to it. So some of the work I do with insurance companies isn't really data science as such, in the sense that I don't really need to understand probability or statistics, and I'm certainly not doing science. I'm basically doing, I wouldn't quite call it data engineering, but it is really just taking data and presenting it in a way that's amenable, because they don't have that, believe it or not. A lot of these systems, one of my favorite ones, I'll talk about that in a sec. So I've stood up here and I've kind of said a lot of things without getting specific. So I just want to talk about a few of the problems that we've been looking at that I think are incredibly interesting and aren't necessarily amenable to your standard data science or machine learning algorithms. Because machine learning algorithms tend to be very tabular based. So the data comes in a big table, everything's kind of laid out. And if you're doing a supervised learning problem, you have your target variable or whatever you're trying to predict in one or two of the columns. Some of these don't really conform to that, or you can't really use your high-end deep learning algorithms because there just isn't enough data. So one I like in particular is customer lapse. So that's a problem in life insurance where you have, say, a 10 or 20-year policy and you're paying monthly premium. And then if you die within the 20 years, you get what's called the sum assured, let's say $100,000. And they calculate a number that is how much you have to pay every month. Because it's set up over 10 years, there's a lot of expenses and you have to pay a broker and there's a whole bunch of things that need to go into that. The first 2 years of premium tends to go away in expenses. So you've got to pay your broker, you've got to set up your policy administration, your regulatory, your overhead, all that kind of stuff. And what happens in a lot of cases is people lapse very quickly. So they sign up for maybe 6 months or a year, and then they lapse and they either go somewhere else or they don't go anywhere at all. And that's actually cost the insurance company money. So even though from a sales point of view it looks quite good because their sales have gone up, from a profitability point of view it's quite bad. Now one of the reasons why, one way, it is kind of what you would call a classic customer churn problem. that a lot of people use, say, logistic regression for. But in life insurance, that doesn't really work because the data is heavily censored. So as a result of that, I won't get into the details here, but some of your standard like logistic regression or classification techniques aren't going to work very well. So we had to kind of learn a whole load of survival analysis to solve that. I thought that was, and there's a whole load of extra things you can do there. And then that feeds into going into the hierarchy of needs. That kind of feeds into then, well, you can start actually changing how you deal with your customers, and it becomes kind of a customer management and a customer relationship problem. Specialty lines is one I'm working on at the moment, where you have Lloyd's business, and you might only have 5, 7, 8,000 policies, and most of it's quite incomplete, and there's data at multiple levels, and actually trying to get it into a flat rectangular structure so that you can even run some kind of basic modeling on doesn't work very well. I find this particularly interesting. I tend to use like Bayesian hierarchical models and stuff where you've got a lot of hidden Markov bits and pieces for it. But one of the big issues you have there is quite often the data quality is very, very poor. So you've kind of got some data in some systems and then other data in other systems, and you're trying to put them all together and trying to figure out. In some cases, you don't even know which policy a claim came from. A problem we're going to talk about in a sec. So if you don't, like if you've got a big list of policies and then you've got a big bunch of claims and you know they're all from the one line of business, you can kind of get an idea if your business is profitable, but you don't really know anything further than that because you don't necessarily know what claim you can tie to which policy. So you don't know which policies are good and which policies are bad. And there's various ways that you can talk about that. And then the final one is where kind of a more traditional data science method comes in is data quality, which is very much a big issue for pretty much all the insurers in the world. I have a friend right now, and his big problem is, like I said, he has a whole load of policies, and then he has a whole load of claims, but the policies he can match the claims to has almost no information on it. But he has a whole load of information in a completely other system that was used to price the business like 2 years ago. Unfortunately, the policy IDs in one system doesn't match the policy IDs in the other. So he knows that all the policies over here are also in this big thing over here, but he can't quite match the two of them together. So he's currently learning all about NLP, and that's one of the things I'm helping him with, trying to come up with some kind of distance metric to say, okay, well, this policy here and this policy here are kind of close to some another. So from a probabilistic point of view, we're going to kind of match them together. So you get all these questions and all these problems that are largely a result of kind of bad and old and ancient systems. But you also kind of get these kind of very, very interesting problems that aren't necessarily directly amenable to scikit-learn or caret or MLlib or any of the ones where you kind of have your nice table and you can just apply your model, do some cross-validation, and then you're done. You actually have to stop, take a step back, have a think about some stuff, maybe do some feature modeling, do a few bits and pieces, think about it, and then, work on what are we going to try and do. But as the previous speaker said, some of this can be quite experimental. But the rewards for something like that can be very, very high. So I've got one final graphic. That was kind of how I felt when I first joined in insurance. It's like, they're doing what now? And they've got that. And then, okay, so what are we going to do here? And everyone seemed to think it was normal. That was the bit that kind of freaked me out. Using Excel to manage millions and millions of rows and trying to put them all together and then wondering because their computer would fall over. And it's like, no, you just do it in pandas or data frame and it'll just be done. But anyway, internally, they don't have that kind of, you kind of have IT, and IT is a bit of a ghetto in insurance. And certainly any actuaries don't want to work in IT, and they certainly don't want to work on systems, because from their point of view, it's seen as like a career killer. So people are actually advised, even if they like that kind of stuff, because they kind of have that natural tech bent, they're kind of advised to get out of systems as quickly as possible, or they'll never go anywhere with their career. So when you kind of have that kind of mentality, I think you often end up in where you end up today with them. So I'm almost done. I'm not going to take much more of your time. I think when you start to see all this happening, and I don't necessarily know how things are going to change in terms of within the industry. I think a lot of changes often gets imposed upon it from without. So I think what we're going to start to see is you're going to have all these new companies that are coming in that don't have all these legacy issues. They have a familiar understanding with tech, modern software techniques, how to manage data, how to do data engineering. They understand that these things are actually quite probabilistic in nature, and that there's no. That's the other very strange thing about a lot of people in insurance. Even though they deal in the risk business, they don't really understand risk in a lot of cases. So they try to engineer their processes so that they don't take any risk, and then that leads to generally quite bad outcomes. Yeah, that's all I really want to say. I think it's a fascinating industry. I know not everyone here is a tech person. We've got kind of a wide swathe of the people interested in data here, but I think if anyone is interested in, data and modeling and doing kind of the tech stuff, and you ever get the opportunity to work in the insurance industry, be careful, because it could be a bad one. But I think don't just dismiss it out of hand because it's insurance. I think there's a whole load of incredibly interesting problems. And I think once this dam breaks, and it will, once this dam breaks, I think you're going to start to see quite a lot of very interesting things that's going to come from that. Yeah, that's all I want to say. As we said, I'm around all day. I love all this stuff. I'll talk nerd all day long. If any of you have any questions or anything for me, I won't take any more of your time because I know we're behind. But thank you very much for listening to me. Bye.